afternoon, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading satellite office down in sunny South Florida. Today's date is Saturday, December the 1st, 2012, and here is this week's weekend review brought to you by WallStreetTrading.com. Want to first start by taking a look to see how the indices and some key sectors closed on a weekly basis here. The NASDAQ closed up 1.12%. The Russell 2000 closed up 1.59%. The Dow Jones closed up 0.45%. The S&P 500 closed up 0.7%. The crude oil closed up 0.97%. GLD got smashed this week, got closed down 2%. Some funny action happened. I believe it was on Wednesday. The gold futures just sold off. They're saying it was a fat finger. Some people are saying it was a flash crash. I don't know what happened, but either way, gold was down more than 2% this week, but it did recover. We'll take a look at that here shortly. SLV closed down 2%. Silver got hit as well, but closed up off of its weekly lows. Banks closed down 8.82%, 0.82%. The oil index, that's a BKX, by the way. The banking index closed down 0.82%. The oil index, the XOI, closed up 0.3%. And the Dow Transports closed up 0.68%. So pretty much, some nice action across the board. Some weakness in the banks and some weakness in the precious metals. But aside from that, everything else, had a nice up day. We had a nice little bounce this week here. So let's go ahead and take a look at the charts to see what's taking place here on the daily charts, the weekly charts, and monthly charts. It is a new month, so we want to start off with the monthly chart of the SPY. You can see here that we sold off all the way down to this 20-day moving average around the 133.67 level on the SPY, and we traded well off those lows for the month. So this has to be taken, very seriously here because this is a nice reversal. So we want to see if the bulls are going to, in fact, gain some control here and give us a buy signal back over the November highs around 143.72 on the chart here. Okay, so that's how the month is looking. You can see we're still in a nice little uptrend as well from the 2009 lows. All right, now we take a look at the weekly chart. You can see the weekly chart bounce right off that key level that we've been mentioning here on the weekly update videos. This 137 level, we're back above that key 140 level. And the next resistance looks like it's back up towards that 144 level. So about $2 to the upside on the SPY, on the S&P 500. Excuse me. Let's go ahead and take a look at the daily chart now. And on the daily chart, interesting action here. Right, we're back inside of that key channel that we've been watching. So far, everybody that got short below this key trend line down here is caught in a bear trap. And, I'm pretty sure they probably covered already. Actually, it's all the way down there. Anybody that got short below this key trend line that we've been tracking since it was acting relevant back here in October, all right, if they're still short, well, they're losing money right now or they're trapped, all right. Now, we're currently at the 50-day simple moving average on the daily chart, which is at around 142.34. That's going to be a key level to watch going into next week. If we could take out Thursday's highs around 142.51, and momentum comes in the market, we're going to be looking for a move up towards 143 and then looking for a move up towards this key level right here, which is around 143.71. All right, you can see that we're right here consolidating inside this little gap that we had a couple weeks back. See, this gap took place over here on November the 6th. And you can see right now we're kind of consolidating in that little area right here. Once we can start holding above 142.27 with some nice momentum, I'll be looking for a move up towards 143, then up towards 143.71, and then 144. If we pull back a little bit against this 50-day simple moving average, we're going to be looking for a move back down towards 141.15, call it 141, which is going to coincide with this 50-day exponential moving average, also this rising 8 EMA, 8 SMA, and this rising 20 simple moving average on the daily chart. So the SPY is looking pretty good. We have come a long way. We haven't really had any pullback yet, so they could surprise us by doing a little fake breakout then pulling back. So you want to be cautious up here. The market was pretty choppy past 2 days. And actually, the market was pretty choppy this week in general. The fiscal cliff stuff is taking heat on the front page right now. So you definitely want to have your stops tight, manage your risk accordingly. Make sure you're trading the stocks that are trading clean and in play, and try to stick with the trend. But right now, the market is trading pretty volatile, pretty choppy, and what we can't do anything about it but trade it accordingly. All right, let's take a look at the triple Qs. All right, the QQQs, take a look at the triple Qs on a monthly chart here. Nice little uptrend. You can see we came near that little downward, we came near that little lower band of the upward channel that we have right here from the 2009 lows, which also kind of coincided with this 20-day simple and exponential moving average. This was a good pickup down here. If the triple Qs could break above 66.21 or so, November highs, and hold, we will be looking for a move back up towards the 69 level, then back up towards the 70.27 level. Taking a look at the weekly chart, all right, you can see we're still above that key 60 level, and we held that key trend line that we highlighted 2 weeks ago in the weekend review video with the back test from that key trend line after selling off, some for about 6 or 7 weeks here. 1, 2, 3, 4, 5, 6, 7, actually about 8 weeks there to the downside. So now we have 2 weeks to the top side. Looks like a key level to watch on the Qs is going to be around this 66.26 level. We take out that 66.26. We want to be looking for some nice action to the top side up towards that 68 level. Taking a look at the daily chart. All right, the daily chart, again, we're back above that key 65 level, this little band right here. We have a declining 50-day simple moving average that's going to be coming in around the 66.28 area. If we can get above that 66.28 area, that would be pretty bullish for a move back up towards that 67.38 area, which is also going to coincide with the back test of this key trend line that we have right here. All right, that caused all the selling action. So we could actually still push up some more into that key trend line into this little resistance band that I have marked here with this red. All right. At the same time, one thing to take note, I don't have it on the chart right now, but we are at a 50% retracement of the triple Qs. I'm going to hide all the drawings right here and just show you guys. We are at a 50% tracement from the Fibonacci from these highs up here to the lows that we made. So again, that key level to watch is going to be around the 66 area, this 50% retracement from the sell-off that we had that took place back here, that started back here in September. So that's how the triple Qs are looking. Let's take a look now at let me take this out real quick here. Let's take a look now at the monthly chart of the IWM, the Russell 2000. All right, the Russell 2000 still chopping up around here. No clean pattern in sight on the monthly chart. Just take note that we did bounce pretty nice off the lows like the rest of the indices here for the month. And looks like we bounced right off the little support that we had down there. So right now, if we could take out last month's highs, November highs around 80 to 82.95, call it 83. You're going to be looking for a push back up towards 85, then towards 87.50. If the Russell 2000 could get some action moving, that could be telling us some signs that we're going to be looking for a continuation move higher. Okay, we want to be looking for some relative strength to see if the Russell. I'm going to be looking to see if the Russell can show some relative strength next week. All right, taking a look at the weekly chart of the Russell 2000, still a nice little uptrend here. It needs to get back above that key level 83, which has been acting as an inflection point the whole year. And every time we try to get above it, they sell it off. For example, right here, we try to get above it. This one looked like it was good to go. They sold it right back off. And now if we get back above that level, who knows? Maybe the third time's going to be the charm. We could maybe push up towards those highs up there. So there's a lot of interesting things going on right now, and it's obviously has to do with, with this, with the fiscal cliff fiasco. So we really got to stay on our P's and Q's and see what the market wants to do and just trade it accordingly. And I keep on saying that because it's just true. A lot of people are getting chopped up there. Luckily, we're staying on the right side of the market and we're managing our risk accordingly. And when the market gets better, then you can start killing it and start having bigger expectations. All right, so taking a look at the daily chart now. If the Russell 2000 could break over this 82.42 area, kind of this 82.50 area, again, we're going to be looking for a push up towards that 83. We have a nice little gap here, all right, actually, let me draw that in right here. Give me 1 second. Have a nice little gap here from this little gap window right here around 82.88 and this key 83.51 area. Okay, I know I have a lot of lines here. Let me take some of this stuff out 1 second. Actually, I'm going to take this out right here. Clean this chart up with you guys while you guys are on the line. Hope you guys are having a great weekend. Again, weekend time, relax. Go do some, some exercise. Get off the screens. Enjoy some time with your family and friends. I do my little weekly run on the beach over here in Fort Lauderdale Beach. I do my little run, kind of clear my mind out and get my mindset back on point. So you can see that little gap area that we have right here, gap window 82.88, gap fill around 83.51. All right, so that can most likely be a target. Again, the Russell 2000 is above the 50-day simple moving average, unlike the SPY and the triple Qs. Okay, so that's how the Russell 2000 is looking. Let's go ahead and take a look now at some other key sectors. You guys know I really don't take a look at the Dow Jones, but in the weekly videos, I like to show you guys just a daily chart of the Dow Jones futures, and you guys can see here that the Dow Jones futures trying to get back up at this 13,000 level. If we can hold above 13,000, we're going to be looking for a push back up towards 13,250. I did not get a chance to show you guys the ES chart as well, the ES chart in my little channel system. Some nice signals here. Take off these studies so you guys can see this action a little bit cleaner. And right now, we're back at this key resistance level. That's why we got to be careful. All right, we're back with this key resistance level. You can see how we sold off on this key trend line, sold off this key trend line, and right now we've been having some little kind of topping tails a little bit there these past 2 days. So one thing that could happen, a little fake breakout and a little reversal candle. That's what I'm gonna be watching for too. If we get some extreme buying, say early next week into this little upper level down around here, around this 1425 level. If we have any reversal candlesticks that show up on the intraday time frame around this 1425 level, we'll be looking for a nice little short right there. At the same time, if we gap down or open up flat on Monday and we are not able to get above 1420, you're going to be looking for a reversal back down as we're at a key area on my channel system charts. And I'll keep you guys posted with that. So let's go ahead and take a look at the commodities now. Starting off with crude oil, because crude oil is looking like it's trying to get jiggy with it here. Want to start off by taking a look at the monthly chart. Remember, we're going to be expecting a big move in crude oil. Not sure if it's going to be the top side or downside, but 2013 I think has a lot of interesting plans for crude. You can see here how it's in a nice little triangle right here that's just warming up, and looks, the apex of the triangle for the monthly chart is around September. Okay, so that's kind of close to a year. But who knows? This thing could start moving, say, early in the year and break out, or start moving early in the year and break down. So we want to keep an eye on crude oil. Take a look at the weekly chart. It's kind of the same thing here. All right, we have four consecutive closes to the green side on the crude oil futures here on the /CL. If we can get back above this 90 level here, we'll be looking for a move back up towards 92, then 94. Taking a look at the daily chart. Let me put the studies back here on the chart. I know my voice sounds kind of funny because, again, I was running and just trying to catch my breath still, looks like. In any case, crude oil above this little downward channel that we have. Of course, you guys know when these downward channels break out, when these downward channels resolve themselves, they usually resolve themselves to the top side. You can see we broke out, kind of traded sideways against that trend line, got an official back test, little inflection low right there, and so far since that low, we're moving higher. A move over Friday's highs on crude, 88.99, call it 89. We'll be looking for a move back up towards 80, 89, 88, and then back up towards this key area around the 91 level. All right, let's take a look at gold /GC. I want to take a look at the gold futures first, and I'll take a quick look at the daily chart of the GLD. Gold futures, they got crushed. Exactly, they got crushed on Wednesday. Again, they're saying it was a fat finger. They're saying it was a flat crash. Who knows? All we have to know is that this thing got a lot of people trapped, including myself. Looked like it was good to go. I was long from back here. It was breaking back out, and then next thing you know, got some selling early in the week, then got that little crash on Wednesday. If gold trades back towards 1,700 is going to be the level to watch. If we trade below 1,700, we're going to be looking for a move back towards 1,670, believe it or not. And, these metals are getting pretty volatile, so try to stay out the sectors that are trading pretty volatile right now and try to stay in the ones that are looking clean. Take a look at the weekly chart of the gold futures. You can see here we still had a little lower low down here, and if we do sell back off to the downside, that's going to be a level to watch, the 1670 level. Taking a look at the monthly chart trading sideways in a range between 1556 and 1800, or call it 1826 up there. All right, now some of you guys take a look at the GLD, so I'll do a quick little run through the GLD for you guys here. GLD has some support around the 165 area. We break below 165, going to be looking for a move back down towards 164. The 200-day moving average right here, the 200-day exponential moving average is around 162.69. 200-day simple moving average is around 161.56. Weekly chart still looks intact, just like the gold futures chart, obviously, and then the monthly chart sideways as well. Let's take a look at silver. Silver's been getting some action as well. Silver is actually trading a little bit stronger than gold, in my opinion. As long as the SLV can hold above 32, look for maybe some sideways consolidation between 33 and 32 off this little up move that it had, then maybe look for another push up. We'll have to wait and see. Taking a look at the weekly chart. All right, 34 is the key level to watch. Once you break above 34, this thing can have a nice move, and we'll be waiting for that. If that happens, take a look at the monthly chart. Monthly chart looks pretty good. Again, 34 the key level to watch on the SLV. Let's take a look at copper. Copper futures I'm going to take a look at here. /HG, we bounce right back above that above this little key consolidation zone we've been talking about in the weekly updates. Back above 354. At the same time, look, we're back inside this little channel right here that we broke down out of. If copper continues to trade strong, we're going to be looking for moving copper back up towards this little resistance zone around and the top of the channel. So double resistance right here around the $3.73 level. Okay, now next thing I want to take a look at is some currencies or the currency sector, I guess you could call it. The dollar futures, and we'll take a look at the euro, the dollar as well. Dollar futures a little bit interesting. If you guys recall, I talked about how we were going to expect a little chop action this week from the dollar, maybe chopping around this level right here. Well, it actually happened. Was I prepared for it like I should have been? No, not really, but it's something that took place that actually I could say that, okay, I was expecting it. I should have been more on my game, expecting this chop action, but here we go. The dollar was bouncing around here from this little consolidation that acted as resistance, and we broke out of it right here. We traded to the top of that channel, sold off. This upward channel we had in play for 1, 2, 3, 4, 5, 6 weeks that broke down last week. Let's see here. We could get a nice little bounce up in the dollar and put a lower high in and then roll right back down. All right, that's one scenario that could take place, or we could still continue to hold below, let's say, 80-40 level and then start to move lower. That's going to catch a bid in the commodities and the energy sector, of course. And right now, we just have to wait and see what happens here. Take a look at the weekly chart. The weekly chart above some key trend lines. You can see last week we had an engulfing candlestick. Now this week, a little doji action. Next week, guys, if we break below this 79, 75 level here, you're going to be looking for the dollar futures to move back down towards 79. And that's going to cause some selling pressure that's going to cause some buying pressure in the commodities to catch a bid, and some buying pressure obviously in the markets. Let's take a look at the monthly chart. The monthly chart still working off the little failed bull flag that took place right here. See the nice little up move bar, sideways consolidation. Should have continued higher, but it broke down. And that 81.43 level acted as resistance as well for the month of November. Let's take a look at the euro dollar now. I'm just going to take a look at the daily chart here on the euro dollar, see how it's acting around my channel analysis here. And you can see one of the key things that we were watching, that we were talking about, was watching this little key trend line on the euro dollar right here. All right, and this little band right here. Obviously, 2 weeks ago, we got the little bounce off the bottom band that we were expecting. That caused the market to get a nice little bounce. And so far, the euro is actually trading pretty strong. If we continue to hold above this key trend line right here, which you see we're trying to break above right now, the euro can actually get a nice move higher, which will actually cause a nice move higher in the markets. We're going to be expecting that dollar to break down if that happens, and it could get interesting. So next week, I think, is going to give us a lot of clues. Also, if I was watching the video from another trader that I follow his work, and he was saying that this whole fiscal cliff fiasco, they have 8 days to come with a resolution. So 8 days from now will be not next week, but the following Monday, I'm assuming here. So we'll see. I'm pretty sure they'll talk about it in the news, as it has been on the news every day on CNBC. All right, so we went over the key indices, the commodities. We went over the currencies. Let's take a look at the volatility index via the VIX. All right, the VIX is chopping around here around this 1484 level, call it 15, and around the 16 level here. Again, remember, this was a consolidation that we were trading in for about a good 1, 2, 3, 4 weeks. We broke down last week. We tried to get back above that key $16 level this week on Wednesday. But obviously, they sold the volatility back off, and now we're just kind of chopping around here. If the volatility index breaks below 1484, 15, going to be looking for a move back down towards 14. And that's obviously going to be telling us that the people are still looking to buy equities and there's no fear in the market. Okay. Now, let's take a look at some key sectors, starting off with the semiconductors, SOX. SOX breaking above the key trend lines. It has come a long way from this little low that it put in right here. Some of the semiconductors are looking pretty good, like they want to get a reversal. Some of them are looking mixed. So let's go and take a look at a couple of those. As you guys know, we look over the stocks that we're going to trade the following trading week, or next, the stocks that we plan on trading next week. We go over those Sunday night at 9:30 p.m. So if you have not been to our Sunday night live chart session in our chat room, you want to make sure you go check it out. It's pretty good stuff. Gets us prepared for the trading week. If you need access to the trading room, you can go to wallstreettrading.com. Fill out the form on the upper right-hand side. You will get the credentials emailed to you within a couple of minutes, and that'll give you the information to log into the chat room. If you have any problems, feel free to email me at ccooper@wallstreettrading.com to get access to that great information that we'll be giving out Sunday night. So semiconductors are kind of chopping around right here. So I'm going to go through a couple of stocks for you guys. Don't want to make the video too long. So semiconductors, let's take a look at a couple of them here. Intel, still looking like garbage in the downtrend, not looking good at all. Not a stock that I would be trading right now. Let's take a look at Qualcomm. Qualcomm looks a little bit better here. You can see it's back above this key 63 level. Qualcomm, a stock to watch. Maybe you could run up towards 65. Take a look at the 60-minute chart on here. You can see it's kind of consolidating in the little range between 63 and this little 63.81 level. Keep an eye on Qualcomm if the semiconductor and the technology sector gets moving. Cree was a good stock that we called for a breakout on last week's video Sunday night. That one had a nice little move up, pulled back, and now looks to maybe continue higher. We'll keep an eye on Cree. Let's take a look at the 60-minute chart of Cree. And you can see you have a nice little bull flag action that's taking place right here on the hourly chart. Nice little up move, sideways consolidation. Move over 32.40 back on Cree. Should take it back up towards 32.80 and then maybe up towards this gap fill 33.40. You can see it's trying to get back above all these moving averages. I like Cree. All right, the only reason why I'm going through these stocks in the daily videos and the weekly videos now, I'm not going to go through everything, but I know some of you guys don't have a chance to make it through the Sunday night chat, so I want to go over some stocks that we're looking at. Okay, SNDK, this is a semiconductor stock that doesn't look strong at all. You can see it's been in a downtrend ever since those highs that we made. Got a little downtrend right there. SNDK breaking below Friday's lows, which is 38.87, should take it back down towards 38.49, and then we have a nice little gap window right here, 38.01, gap fill all the way down here at 35. Keep an eye on SNDK if the technology sectors pull back and the semiconductors are weak, say sometime early next week. All right, so that's it for the semiconductors. Take a look at the BKX. The banks are trying to hang in there. You guys know I take a look at the BKX. I have some channel analysis on it that's pretty accurate. It's been helping me out pretty good. Banks are still hanging in there. We're back above that key 48 level on the BKX. Right now, you can see the banks are just kind of chopping around here. As long as they can hang above 48 on the BKX, I'm going to be looking for that little consolidation, and then it'll move back up above the 50 level there. So let's take a look at a couple banks. Goldman Sachs, GS. Chopping around here, really just consolidating between 116 and this 121.44 level. Nothing to do right there until we see some more action. Take a look at Citigroup. Citigroup looks like it's trying to possibly break down below 34 and maybe retest this 200-day moving averages that we have down here around the 31.80, the 32 level. Keep an eye on Citigroup if it breaks and holds below 34. Bank of America, BAC, actually the strongest bank out there right now, if you ask me. And you can just clearly see that from the chart. Bank of America over this 998 level, call it 10, should be able to make a nice move. Keep an eye on Bank of America to possibly make a move through the $10 level here early next week or midweek. If the banks are strong, the market gets a nice bounce. Wells Fargo, one of the weaker banks out there. If the banks get some selling pressure, you want to be looking to short Wells Fargo. Why? Because you have this nice little consolidation right here that we broke out of. Broke to the downside, so now we're kind of just bouncing back up to that area. If we start to see some reversal candlesticks intraday or form on the daily time frames, we're going to be looking to short Wells Fargo. If the banks do roll over and the market does look to pull back, Wells Fargo's below this little support level here. So people that are maybe long from right here that's at this pain are going to be looking to get flat somewhere in this area if we're not able to pop back up there or get back above this 33.50 level. Keep an eye on that right there. And is there any of the other banks? JP Morgan, of course, can't miss that. JPM actually hanging there as well. A break above 41.35 in JPM could take it back up towards this 42.64 level. We have a gap right here at 42. And the gap fill around, let's see here, around 42.57. Let's take a look at the agriculture stocks, MOO. This is the ETF breaking out this little downward channel. The agriculture stocks have been moving up pretty nice here. Monsanto being one of the key ones that looks pretty good. I would not be a buyer right here. You see how you have some people that are possibly trapped on a break over this 92 level here, and could pull back down towards 90. This has come a long way from 83 all the way to 93, so about $10. I would expect it to pull back a little bit. So keep an eye on Monsanto. for some pullback action or maybe some high base consolidation. AGU, they had that little gap down from the earnings. It's recovering up pretty well here. AGU back above 103 can make a move back up towards 106. Take a look at CF. CF looking pretty good. CF's going to give a buy signal if it breaks over this 214. Let's see, the high from Thursday was 214.75, so call it 215. Let's take a look at the 60-minute chart. 60-minute chart looks pretty decent, kind of consolidating up here near the highs. This thing, get jiggy with it. This thing can maybe make a nice move back up, I would say, towards a 216, 218 area. Let's take a look at potash. What potash is doing. Potash is one of the weaker ones in the group. You can see it's in a little downtrend right there, not looking good at all. And Mosaic, MOS coming back into these moving averages here. If we see some pullback action, this could probably pull back a little bit, so you want to watch out with that. Let's take a look at the big cap tech stocks. You guys, of course, obviously can't have a video without talking about Apple, since you guys love to trade Apple. I really don't trade Apple that much, but if I do, I trade it via call options or put options or weeklies. See Apple back above that key 570 level we talked about, having some trouble at this 590 level. And it's really just grinding around here. A lot of people are expecting maybe Apple announces some type of special dividends, since all these companies are doing special dividends. So it's kind of tricky to short Apple, because Apple does have a lot of cash in the books, and they could very well announce a special dividend. The stock could be up $5 pre-market, then rip even higher when the market opens. So keep an eye on Apple. Take a look at the weekly chart on Apple. You can see it had a nice little bounce off that 522 level here. Looks pretty good on the weekly. Take a look at the monthly. Monthly level bounce right off those 20-day simple moving average and exponential moving averages there. All right, one stock that's trading pretty strong is Amazon. Amazon's just continue to perform well off the little sell-off. Just grinding higher. Apple, I think this may be the new stock that everybody's going to be looking at, especially we have the holidays coming up. A lot of people are going to be looking to buy. A lot of people are going to be looking to go to Best Buy, see what Best Buy has it, see how Best Buy has it up for sale, see Best Buy's prices, see how the item looks, and then go buy it online at Amazon. So expect Amazon to trend higher. As you can see here, it's in a nice little upward trend on our closing price system right here. IBM. Big cap tech stock. This one's trading like garbage. Looks like no money looks to be here. I would not be trading IBM. Could actually pull back a little bit down back towards the 186 level. Priceline, PCLN, had a nice little move last week. I really don't trade Priceline, but I do keep it on watch. One stock that I do trade that's kind of similar to Priceline is Expedia, if I'm not mistaken. And Expedia is trading up pretty strong, much cheaper. If you're looking to get exposure in that little online type of sales action, travel group there. Want to take a look at Expedia. Let's take a look at the 60-minute chart of Expedia. Wow, this looks pretty good here. You can see how Expedia is consolidating in a range between 61, okay, and this little range right here, 62. So a break over 62 and holding above 62 will look good for Expedia. You can see how it's kind of grinding on these moving averages right here. Let's see if I missed anything or anything else that I think that I want to go over aside from going over it in Sunday night's video session. Let me think. And energy stocks real quick. ExxonMobil, chopping around this key 88 level. Nothing really there. CVX, nothing really there. Schlumberger, I'm still waiting for these energy stocks to get a nice bounce. Schlumberger actually looks a little bit constructive. A move over 72 on Schlumberger, that actually looks pretty good. You can see how it has this nice little gap right here at 72. Gap fill would actually be around this 73.18 level there. So I definitely keep an eye on Schlumberger. Let's take a look at the 60-minute chart on Schlumberger. And you got a nice little bull flag setting up here that try to break out at the close. So keep an eye on Schlumberger, because you have this nice little up move, sideways consolidation, nice little bull flag on the 60-minute chart above these rising moving averages. It's going to be on my A list going into next week. That's about it, guys. I'll go over some more stuff on Sunday night at 9:30 p.m. Be there or be square. Catch you guys later. Have a great weekend. Enjoy tomorrow's football action if you guys like to watch football like I do. And make sure you get out, do some exercise, relax your mind, clear your mind, and have a great weekend, guys. Make sure you come check out the website, wallstreettrading.com, and sign up for the 14-day free trial to our live chat room. Have a great day. Cheers.